Dirty dealings, corporate battles, consumer woes. This is Evening 5. Korean investment firm GG56 Korea will invest $1 billion US dollars or 4.37 billion ringgit in Forest City to develop Malaysia's first Korean culture town. This is following the signing of a memorandum of agreement with Forest City's master developer Country Garden Pacific View to develop the project, which will include K-Content production studios, an international cultural district, and world-class residential development, Panama reports. CGPV Executive Director Datuk Mat Oman Yusof said the MOA marked a significant milestone in the ongoing development for Forest City, further solidifying its position as a global hub for innovation, culture and sustainable growth. According to Muhammad Oman, the MOA reflects its shared vision for Forest City, and they are thrilled to collaborate with GG56 Korea to bring these transformative projects to life. The agreement was signed by Muhammad Oman on behalf of CGPV, while GG56 Korea was represented by its CEO and co-founder Kim Yong-kun and Chun Dong-wan, chairman of CMK Consortium, a subsidiary of GG56 Korea. Meanwhile, Kim said the agreement provided an opportunity for the company to create something extraordinary in Forest City and establish it as a leading global destination. GG56 Korea is an investment firm with a focus on high-impact projects in areas such as healthcare, entertainment, technology, and real estate. SD Guthrie, formerly Sime Darby Plantation, saw its second quarter net profit improve by 9% year-on-year to 415 million thanks to higher prices and output as well as better downstream margins. Revenue for the quarter rose 15.3% year-on-year to 4.97 billion from 4.31 billion previously. Prices of crude palm oil and palm kernel will remain firm until year-end in line with global economic recovery. SD Guthrie also expects the plantation operations to continue to register improvements, especially in Malaysia, following the group's intensive rehabilitation efforts and enhanced agronomic practices. The planter, which is the world's largest palm oil producer by acreage, also declared an interim dividend of 4.65 cents per share, up 1.4 cents from last year. For the first half, net profit jumped 39% year-on-year to 626 million, as revenue grew 11% during the quarter to 9.31 billion from 8.37 billion previously. Group MD Datuk Muhammad Helmi Othman Pasha said that with its critical foundation in place, the group is well positioned to shift focus towards its growth strategies and explore further diversification of its business to deliver a strong performance in the future. Meanwhile, SD Guthrie today also announced its partnership with TH Properties to develop Malaysia's first halal-certified managed industrial park in Negeri Sembilan. SD Guthrie says it is also in active discussions with several agencies and partners to transform its land into Malaysia's first 1,069-acre green industrial park development project, the Korean Integrated Green Industrial Park in Perak. YTL Power International saw its fourth quarter net profit fall 5.6% to 1.07 billion on lower contribution from its power generation and investment holding activities business segments. Revenue for the quarter likewise also came in lower at 6.34 billion from 7.09 billion last year. YTLP also declared a second interim dividend of 4 cents per share, which brings its total declared dividend payout for FY 2024 to 7 cents per share. Nevertheless, the group managed to end FY 2024 on a positive note, with net profit jumping 71% year-on-year to 3.46 billion on better performance in the power generation segment, which saw better margins, lower interest expenses following loan repayments, and the strengthening of the Singapore dollar. Revenue grew 2% to 22.3 billion in FY 2024 from 21.9 billion in FY 2023. On prospects, YTLP said that as power generation is an essential service, demand is expected to remain stable. The group is also developing a large portion of the Kulayang estate into a large-scale solar power facility with a generation capacity of up to 500 megawatts to co-power a 500 megawatt green data center park. As for its telecommunications segment, YTL Communications expects to extend its 5G services to the rest of the country in tandem with the rollout of Digital Nasional's 5G network. Malaysia Marine and Heavy Engineering Holdings swung to the black in its second quarter thanks to cost recovery claims. Net profit for the second quarter came in at 74 million compared to a net loss of 388.7 million a year ago. This was despite revenue declining 15% year-on-year to 900 million from 1.06 billion on lower progress billings. No dividend was declared for the quarter under review. MHB is exploring a balanced portfolio in both conventional and clean energy spaces, explained Managing Director and CEO Muhammad Nazir Muhammad Noor. However, in the meantime, he says investment by oil majors in upstream activities provides opportunities for conversion projects. MHB, which has a niche focus on LNG carriers, aims to broaden its customer base amid the growing number of carriers in the market. Muhammad Nazir admits that intense competition remains a challenge given the emergence of new repair yards in neighbouring countries and China. For the first half, the group's total revenue grew 20% year-on-year to 1.678 billion, while MHB turned in a net profit of 85.3 million compared with a net loss of 385 million a year ago. MHB's share price was buoyed by its earnings, climbing as much as 13% to 48 cent. The counter eventually ended the day 11% or 4.5 cent up to close at 47 cent. Maxis, the country's second largest telco, posted a 7.9% rise in its second quarter earnings thanks to higher consumer service revenue and the enterprise business. Net profit came in at 356 million on the back of revenue improving 4.7% year-on-year to 2.59 billion from 2.47 billion ringgit. Maxis, which is controlled by billionaire T. Ananda Krishnan, declared a second interim single-tier tax-exempt dividend of 4 cents per share. For the first half, net profit rose 9% year-on-year to 709 million, while revenue increased by 4% to 5.19 billion from 5 billion ringgit. Looking ahead, Maxis said it is keeping to its financial targets and current strategy to grow mobile, fibre and enterprise businesses. CEO Goh Xiao Ing says the strong performance demonstrates its readiness to take on a lead role in supporting Malaysia's digital ambitions through the rollout of a 5G advanced network. Service revenue, which excludes sales of devices, grew 4.9% to 2.22 billion from 2.11 billion ringgit. Service revenue at its consumer business was up 3.7%, while that of its enterprise business rose 10.8%. Enterprise revenue grew 10.8% mainly from the arrangement for fixed connectivity services as well as 2G and 4G wholesale services. Maxis also reaffirmed its FY 2024 guidance, projecting low single-digit growth in service revenue, marginal to low single-digit growth in EBITDA. Maxis is also planning to keep capital expenditure under $1 billion before any potential impact from 5G.